off by much. This after Saudi Arabia pledged to shave an extra 1 million barrels per day from its production in July, taking output to the lowest level in years in an effort to stabilize the market. For more, we're joined now from Vienna by Helima Croft, Global Head Strategy at RBC Capital Markets. Helima, thank you so much for joining us. It certainly was an interesting weekend, I'm sure, from where you were in Vienna. Would you have expected a bigger pop on the back of this? And do you think this will be a disappointing reaction from Saudi's perspective?
I mean, I think the Saudis are not as focused on what happens the first or second day after an OPEC meeting. We typically have a situation where a cut is announced, we have a bit of a rally, and then there's this kind of assessment of what does the demand picture look like? I mean, there is this tug of war between people who are focused on the physical markets and what this means for the expected inventory deficits in the back half of the year, and those who are trading on sort of macro concerns, recession concerns. And so there has been this real push-pull in the market. And so I think people are assessing this cut, but there also is this just wall of worry when it comes to broader economic concerns.
I'm hearing this a lot. Physical market versus financial market, and that the financial market is not reflecting what's going on in the physical market. Can you explain the divergence?
Again, I think we have a lot of people in this market. My colleague, Mike Tran, talks about them as sort of tourist traders who would trade oil as part of a macro book, who are not really fundamentally driven traders, who are essentially expressing a view about concerns about the economy through taking a short position on oil. So I do think that there are a host of people out there in the market who just believe that we're going to see a significant fall off in demand for oil. And so that is what Saudi Arabia is sort of struggling to overcome these concerns when they announce these deeper cuts. But we expect the Saudis to really back words with barrels when it comes to cut action. I mean, some people were out yesterday saying, well, Saudi Arabia is doing this alone. It would have been better if they did it with the rest of the group. But I would counter that by saying that if there was a 1 million barrel a day cut announced by all the OPEC members, people would start to question whether anyone but Saudi would actually comply. So when Saudi says 1 million in July, I think we can expect 1 million from Saudi Arabia in July.
Which has a lot of people making comparisons to what Saudi Arabia did in the 1980s when they went it alone with production cuts and nobody else followed. And it was at a great peril to Saudi Arabia before they shifted strategy. It was years and years of deficits. Do you think those parallels are warranted, or in any way today is similar to that?
I actually love that question, because there was the 1980s experiment that actually people brought up in 2014 and 2015 when Saudi Arabia decided to remember that Thanksgiving meeting in 2014 not to put a floor in for prices. They went to war with U.S. shale, and that did not turn out well for them. By the time they decided to get back in the business of active market management in November of 2016, their countries were running huge fiscal deficits. They had a huge inventory hole they had to pull themselves out of. So I would just tell your viewers that I don't get any sense that Saudi Arabia or the rest of OPEC is looking to engage in another market share war. I think when they look at Russian production, they say, yes, Russian barrels have moved to Asia, but Russia is still actually below quota. And Russia is locked out of its most important market. And we've seen Middle Eastern barrels move into Europe. So there has been this sort of new energy map. But, you know, the Saudis would say to us yesterday, we're still the #1 supplier into China, and we've actually picked up market share in Europe. So they're not actually deeply concerned in their public statements about what Russia's doing in terms of maintaining their volumes on the market.
But you mentioned that China exposure and that great recovery isn't looking so great when it comes to the economic data. How vulnerable is that to the oil price?
I mean, again, I think what's happened is that there's potentially an overexuberance about the China reopening. And so you have a crisis of confidence when manufacturing data does not look as strong as anticipated. But that does not mean, if you look at the physical indicators, that we're not seeing an uptick in demand for oil in China. Like, the actual physical data is constructive. But again, when people see manufacturing data, it's kind of a sum of all fears when they think about what this could potentially mean for demand.
When we zoom out a little, the first production cut was April. Oil was at $80. Now you have another one. Oil's at $72. So the first one did not put the floor at 80. If you had to top and tail this, what's the floor? What's the upside for oil?
Actually, I would say this is the third cut. Remember, it was in October that we had the announcement of the 2 million barrel a day cut.
Yes, that's right.
I think from the Saudi perspective, we've written about this, is that they would run this sort of counter argument saying, okay, where would oil be given the strong demand concerns that are out there, the broader macro fears, where would oil be in the absence of OPEC taking this action? And again, what they said in October is that they were deeply concerned that oil would be in the 50s if they had not acted then. So of course, we're not back to 80, though we're hanging out at about 77 today, but they would say that in the absence of OPEC action, we'd be looking at a much more negative price outlook.
Is this the last then of the cuts, or do you think there's more to come?
It's going to be key to see what happens in July. We will all be back in 1 month for the OPEC seminar. Saudi Arabia has said that the production cut that they announced yesterday is going to be 1 month. We should watch for indicators about Saudi's willingness to extend this additional 1 million barrel a day cut, because again, we think this is very material, because 1 million from OPEC plus looks very different from the market standpoint than 1 million from Saudi Arabia. 1 million from Saudi Arabia, I would argue, is a lot more of a material reduction than a collective 1 million from OPEC, given the issues about broader compliance within OPEC.
All right.